Buying a home in Raleigh can lead to extreme financial stress if you're not aware of all of the hidden costs. And this leads to the ultimate question of whether you're actually financially prepared to own a home. And just because you've qualified for a nice mortgage, are you actually able to afford it? Hi, I'm Domingo, and after doing 2.9 million in personal and professional deals, I started this YouTube channel to help people like you navigate this decision. By the end of this video, you're going to know all the hidden fees to a real estate transaction, and you'll be prepared to either make a financial plan or create a budget surrounding buying a home. And like with many goals, it's helpful to work backwards. So we're going to start with the cost of owning the home and then move into the cost of buying. This is the exact order that I recommend you go in when buying a home. So unless you're already really comfortable budgeting for owning, don't skip ahead. Once you buy a home, how do you know if you're going to be financially secure enough to actually own it? The goal of this section is to help you proactively budget so that once you close on a home, you're not immediately feeling underwater. Additionally, once you know this budget, you're going to know what mortgage payment to strive for during the home buying process. This ultimately translates to the reasonable price of a home that you could afford. Let's say your mortgage payment is about $3,500 a month, and that's about the equivalent of buying a $500,000 home, the 20% down payment at a 6% interest rate. Now, there's three core elements to this payment. Your principal, which is the amount that you're paying to gain equity in the home, interest, which is the cost you're paying the lender for borrowing the money, and escrow, which is a trust account managed by your lender, which consists of both taxes and insurance payments. At the time of making this video, the city of Raleigh actually just increased my property taxes, so on my mortgage payment, it just bumped up by about $600 a month. Now, that's a huge increase, but it's mostly just so you're aware that even with a fixed rate loan, you still have to account for a buffer room in case your taxes and insurance go up. Next thing is maintenance cost of owning a home. The reactive way of handling this is that if a problem comes up, you just hire somebody out to fix the problem. Alternatively, the proactive way of handling this is to budget roughly 5% of your mortgage payment every single month to just set aside for future maintenance problems. The next thing is what in the investing world we call capital expenditures. This is basically a maintenance item, except it's a dedicated pot of money to the big ticket items that have a lifespan on it. The three most notable is your roof, your HVAC or HVAC, and your water heater. These can cost from several $1,000s all the way up to $15,000 or $20,000. This I would also recommend being at 5%, so that's another $175 a month. Next is utilities. For water, I'd budget about $150 a month in Raleigh, and as for electric, I'd say anywhere from $125 to $250, depending on whether or not you're using an EV charger. Trash and recycling, that's going to be included in your taxes with the city, so you don't have to pay a separate fee for that. And for the homes that use septic and gas, you'll want to factor this in as well. Septic is about $275 a cleaning, and gas could cost anywhere from $500 to $750 to fill up a 250-gallon tank. Next is internet, which if you're going to use Google Fiber, which is what I use, that's $75 a month. And then if you want to have a security system, that could cost you minimally $50 a month just for the basic package. And then depending on if you have cameras and all these other alert systems, it can be more than that. For pests, termites, and mosquitoes, the cheapest I've seen around here is $75 a month, and that's typically a package deal. So maybe estimate about $125 or more. So being on the conservative side, this leads to a total monthly recurring expense of about $4,375. So you can see how we very quickly go from a $2,900 principal and interest mortgage payment to $3,500 if you include taxes and insurance, all the way up to over $4,000 when you tack on utilities, maintenance, and capital expenditures. As far as debt to income ratios of what you're comfortable spending, that'll be up to you, but I would say common benchmarks you could refer to is 25% of your monthly income, 30%, and 40%. So this is going to be determined by your risk tolerance, but what's also important is that you also have to have a reserve. A very traditional reserve would be 3 months of your expenses if you had no income, but especially during COVID, we saw a lot of people bump that up to 6 months in reserve, and that way if anything really bad happens, you know that you're covered for at least half a year. Have you ever wondered how much money in cash you need before you start buying a home? In this section, we're going to detail all of that, starting with the home search, going into the contract to close, and then ending with the actual moving process. Starting with the home search costs. Up front, we're going to have the travel costs. Now let's say you stay here for 2 days and 2 nights in order to search for your home. A good estimate for lodging here would be about $120 a night, which this could obviously go up or down depending on where you stay. As far as renting a car, I'd budget $60 a day, so for this trip, $120. As for gas, it's about $3.50 a gallon, so you're probably not going to spend more than $40. As for the cost of living, food here is pretty average. It's pretty on par with the rest of the nation. So I'd say if you were to buy all 3 meals per person per day, it'd be about $36. So this comes out to $144. It's really hard to estimate the plane tickets, so you'll just have to research that on your end. And so this brings us from anywhere from $0 if you do it virtually to $550 for the entire trip, not including your plane ticket. The next step of the home buying process is going to be contract to close. In this example, we're going to stick with a $500,000 home because I think that's a good comparable home for the entire Raleigh market. So first up, you're going to want to be prepared for the due diligence fee. This is unique to North Carolina. I mean, I've heard there may be one other state in the entire US that use due diligence fee, but essentially what this is it's a non-refundable deposit that's made within the first 3 days of going under contract to the seller. A very competitive due diligence fee here, you could assume about 1.5% of the list amount. This is entirely your decision and entirely what you're comfortable with. But unless the sellers violate the contract, then this $7,500 is non-refundable. Next up is the earnest money deposit, which is really what the rest of the nation uses. This is a conditionally refundable deposit that's also made to the seller in order to go under contract for the home. The main difference being if you go under contract and you later decide to withdraw, as long as this is before the end of your due diligence period, then the earnest money is refunded to you. However, if you wait until after the due diligence period, then this deposit becomes non-refundable. That is unless the seller breaches contract or let's say you have a VA FHA addendum. Now in the state of North Carolina, the earnest money deposit is not seen as important as the due diligence fee, and so we typically see rates of this go around 1%. Next up, you have all of the inspections that occur during the due diligence process. Now, there's a ton of inspections you could do during this phase, but the 2 most common that you're going to see is a standard home inspection and then a pest and termite inspection. A standard home inspection on an average size home will cost you about $500. Now, pests and termites depend on the square footage of your home as well, but that could be as cheap as $55 and probably no more than $150. Septic will run you about $275 an inspection, and then wells about $290. HVAC inspection will cost you about $75 to $90, and then lead, radon, and asbestos are about $150 each. And then depending on the type of property you're buying, let's say it has a lot of land, if you want to get a survey, that could run you from $500 to $1,000. Now, the last element of this section is going to be the cash to close. This is where things like the down payment get calculated. And on a $500,000 home, this could vary drastically depending on the type of lending you're using. For example, if you use a VA loan, which is a 0% down payment, then as far as your down payment, it's $0. Alternatively, if you use an FHA loan, which is an option available to first-time home buyers and consists of a 3.5% down payment, then your down payment here is going to be $17,500. And then lastly, if you're using a standard 20% down payment, which is usually what a lender requires so that you don't have to buy mortgage insurance, then the cash that you're going to have to bring to the table for the down payment is $100,000. And the next up is realtor fees, which as a buyer, I would realistically budget anywhere from $0 up to maybe $2,000. And the reason why this answer is it depends is because it depends on what the cooperating fee is that's given by the listing agent. The only time you would pay more than that is if the listing agent's cooperating fee does not cover the entire commission that you negotiated with your agent during the buyer agency agreement phase. Any commission ever paid is always negotiable, and it has to be agreed upon in writing, so make sure you're paying attention to this before you start working with an agent. Now, next up for cash to close, you're gonna have a bunch of items that you could either just pay outright, or you could also wrap it into your loan. It becomes part of your mortgage payment, so it reduces the amount of money you need in order to close. But of course, it increases your principal balance of that mortgage payment, which then translates to a higher monthly mortgage payment. Now, there's a lot of things that can be included in this section, so I'm only going to highlight the major ones that you're typically going to see. So first up, in order to pay for the attorney, which includes the title search and the attorney services, this is going to be roughly $2,000. And then additionally, the appraisal is going to cost about $500 or more, and this just depends on whether or not you already paid it or if this is going to be paid at closing. Loan fees, this is things like origination fees, underwriting fees. This typically runs you about $2,000 or more. Escrow, your lender is going to require you to make an initial down payment for taxes and insurance. This is going to be probably about $4,000 or more. And of course, this depends on the price of your home. Prepaid interest. So this is a big thing, right? So if you close at, let's say, January 1st, you have to pay prepaid interest for the remainder of the days in January. Let's just say you buy in the middle of the month and we estimate $1,000 for prepaid interest. Next up is prorated taxes and HOA fees. Let's say that you buy in the middle of the year. In this case, the seller is going to give you a prorated amount of the taxes for half of the year, and this is the exact same for HOA fees if they're paid at an annual basis. Next up is VA funding fee. This changes based on the number of VA loans you've done, but let's just say if you're using this, it's $4,000. And then lastly, which this is great for you, we're going to circle back to due diligence funds and earnest money deposit. So in the big picture for due diligence and earnest money, you pay that as a deposit up front in cash. but that will come back to you at the very end and it gets worked into the actual loan itself. So you don't just lose that money, unless of course you back out of the contract. So from this point, you're going to want to work with your loan officer to determine what costs you're going to pay in cash versus what costs you're going to wrap into the loan. Now, if you're wrapping everything into the loan, then you could really get through the cash to close with as little as $2,500 to $5,000 down. And I've seen clients really only have to pay like a couple hundred to close if they're using something like a VA loan. The last thing you need to take into account is the cost for moving. So let's just assume you use a moving company, right? Like you could obviously just move yourself. For a typical size family, I mean, I would plan at least $7,500 if you're coming from somewhere like New York. Just know that you should budget this accordingly up front so that you don't run out of cash during the contract to close process, and then now you're stuck in a sticky situation when it comes to actually moving to the home that you just bought. And then the next thing about moving is really situational dependent, and that's going to be however much money you want to spend on the repairs. Actually, the most common one that I see is people just painting walls, right? So you're going to want to factor in ahead of time, are you going to hire people to do this, or are you going to do it yourself? Alternatively, you could just move into your home, and if you're going to stay there for a really long time and you don't really mind, then you could also just do a lot of do-it-yourself projects and slowly improve on it, learning along the way. And then the last thing to consider is, what are the holding costs of whatever it is you're leaving behind? Let's say you have another property that you need to sell, and so you decided that you're going to move first and then sell that property. What are the holding costs? Because you're still paying a mortgage payment, right? You're still paying for insurance and taxes at a minimum if you own the home outright. Then in addition to that, you're going to have all the upfront costs included whenever you sell a home. So really, the best way that I would approach this is just look at your unique situation, and I would work with a listing agent or even talk to your buyer's agent. All right, so with all of that being said, at a bare minimum, I would budget at least $2,000 during the moving phase if you were to do it yourself and you're not really planning on making repairs and you don't have any holding costs for property that you need to sell. But then of course this could go way up, so just do your math beforehand. This particular example just really depends on where you're at. Now this leads us to the grand total. So let's say $500,000 home, 20% down payment at 6% interest rate, and you're gonna have 3 months in reserve, and you travel to North Carolina so that you could spend 2 days and 2 nights looking at homes. So this will bring the grand total to $130,675 in cash in order to make this purchase. Now, I know what you're thinking at this point. You're thinking, oh, that's an insane amount of cash, and home buying is just never going to be for me. But remember, with options like a VA loan or even a USDA loan or FHA loan, there's many options to buy a home with very minimal money down. I will say that it's worth noting that with less money down, that means that the lender's covering a higher principal amount, which again means higher monthly mortgage payments, but you don't need as much cash in order to buy the home. In any case, my main recommendation is use all of this math to reverse engineer what price point you should be pursuing when purchasing a home. A good debt to income ratio that I would recommend pursuing is try to keep your total house payments to 30% of your monthly income. Owning a home is just extremely expensive, right? Like, you will have things go wrong and that will feel stressful. And so the last thing you want to do is be at the max budget. Suddenly some emergency happens, like a water heater breaks and your insurance company doesn't want to cover it, or your home warranty won't cover it, right? On top of all this, you have 30% towards your home, but you still have other monthly recurring expenses with your car, maybe student debt, so on and so forth. So here's my final note. Preparing to buy entails more than just becoming financially prepared. And if you're like most people, they're going to start researching the area before going. And in my experience, which I'm included in this, you're going to find a lot of people that talk about the overall aspects of moving to Raleigh or the Triangle. And the truth is, there's a lot to it. So sometimes these videos might be oddly specific, yet too generic to really make an informed decision on. So if you want more tactile and tangible information, be sure to subscribe to my channel. I'm going to be releasing a complete Buying a Home in Raleigh series where I cover topics like this. Thanks. See you next time.